Hey all, Nick here, staying up extra late to get this one out. Nvidia quarterly earnings always feel like something big and significant is happening. Q4 fiscal 2026 felt especially so. Let's get into it here. And the question we're now asking and want to answer here is Nvidia, it looks like, is well on course to easily surpass 300 billion in sales for the current fiscal year of 2027, which corresponds mostly with calendar year 2026. Easily, it looks like, on pace to exceed 300 billion in sales, perhaps more like 400 billion in sales. So the next milestone, $500 billion in revenue, that seems absurd. These numbers are so big. Is it possible? And if so, how is this even working? Let's take a look. Let's start with a little bit of macro here. You've probably gotten used to seeing this chart now. This is our CSI hierarchy of the economy. Why does it look this way? Well, let's break this down. At every step in the production of any product or service, when a company purchases inputs and then does additional work to create something brand new, value is added, and therefore a higher price can be charged as it passes it along, that new product or service, to new customers. And the revenue they earn is usually, in a normal functioning economy, larger than the supplier's input. And so this is illustrated here in an inverted triangle. You start with basic inputs at the bottom and you work your way up into infrastructure and services, and then finish at the top, products and services. The basic economic concept and why final product and service end markets at the top of the hierarchy are so large, encompassing a very large, if not majority, portion of global GDP, which is probably on pace to be about or more than 120 trillion this year. But something brand new is being created, and the model has been flipped on its head. And Jensen Huang's comments during the Q4 fiscal 2026 earnings call explain why. AI compute is changing the nature of the $6 trillion IT sector. It's a smaller sector of the economy, in the past an enabling sector that is used to increase productivity of the users of the other industries within the economy. But essentially, in Nvidia and Jensen's summation here, compute, or the IT sector, is no longer about productivity gains like in the past. AI compute is now actually just revenue itself. So in the last few months over on Semi Insider, we've been talking about this, why we don't consider IT to be a standalone sector anymore, but rather embedded into the other 10 sectors of the economy themselves. Let's break this down a little bit more. This quote here: in this new world of AI, for the IT sector, compute actually equals revenue. Back in January, Jensen explained it this way, as the 5-layer cake. And you see this actually looks a little bit like that economic hierarchy, except it's been inverted. The lower layers are actually larger than the actual end markets there at the top. The whole hierarchy has been flipped on its head. And this is again because something brand new is being built. So the foundation layers are currently encompassing a bigger amount of spend today. And then once that foundation has been built, the normal economic hierarchy of end market products and services growing and being the larger segment of the global economy can resume again. But these things do take time. It's measured in years, even decades. And currently, what Nvidia is saying here is something brand new is being built, and the base layers need to be built out first before the final products and services at the top can expand. So here's how it looks today. Based off of 2025 numbers and expected growth, we're thinking perhaps $3.5 trillion in global investments will be made in energy, in electrification, upgrades to the energy grid, power production, and so on. Huge amounts of money being poured into that infrastructure. And in tandem with that, very closely tied in with that, are semiconductors themselves. A massive pull-in last year and expected to be pulled in this year for the semi industry. The previous estimate was it would reach 1 trillion in total global end market sales by the end of this decade, but is actually on pace to hit that milestone a few years early, perhaps as early as this year. Estimates coming in that it will actually perhaps just reach 1 trillion in 2026. And what are those semiconductors being used for? Well, besides all the other stuff, they're normally used for smartphones, PCs, consumer devices, so on and so forth. Data center infrastructure has very quickly become one of the largest end markets for semiconductors. And famously now, the hyperscaler capital expenditure spend, that would be Amazon AWS, Microsoft Azure, Google Cloud, Oracle Cloud, Meta, expected to be up to $700 billion in total CapEx spend this year. And then the upper layers of that cake, a bit of a mystery at this point and causing a lot of disruption, especially at the top, because of the layer right below it. The AI models themselves being cranked out by the top AI labs like OpenAI. Reports suggesting that they maybe hit 20 billion in revenue at the end of 2025. Anthropic, perhaps 14 billion, a 10x year-over-year revenue, maybe 200 million at Perplexity, so on and so forth. So massive growth for those AI labs and disrupting what the final top layer is actually going to look like. And this is showing up in things like the software apocalypse, February 2026, as the market digests changes taking place, how much money it is going to cost for existing companies there in those end markets to fire up a new development cycle, crank out new software, new devices with AI embedded in it. But we do know this, at least on that top layer, Nvidia is also participating there. They said physical AI revenue was about $6 billion in this last year. Self-driving cars being one example, but more end markets and applications will be created as the lower levels of this 5-layer cake are built and mature. So in the meantime, let's get back to this question. How big can Nvidia realistically get? Is the next milestone 500 billion in revenue, $500 billion in revenue? These are absurd sounding numbers. Is it really actually possible? As is always the case when a brand new market is created, no one really knows the answer to this question. No one really knows when the growth cycle is going to come to an end, but the trend is still very much going strong with the Q1 outlook for 78 billion in sales, applying another quarter of 77% year-over-year growth for Nvidia. And CFO Colette Kress said to expect sequential growth. That's in absolute dollars, not in percentage growth rate step-ups, but absolute dollar terms. Sequential growth expected to continue throughout this next year. So it appears that it's possible Nvidia could actually be getting close to reaching 400 billion in revenue by the end of this new fiscal year. How is it possible that Nvidia sales are gobbling up so much of that hyperscaler capex, expected to be perhaps 700 billion this year? We actually did a video and a write-up deep dive on this time a year ago on IP, or intellectual property. That portion of the semiconductor industry and really the entire economy, intellectual property, patents, those types of things, they're foundational. They're one of those smaller base layers in the cake. And in the traditional economic hierarchy, is not a very big revenue generator. But a misunderstood aspect of NVIDIA's business is it doesn't just simply sell chips anymore. Even the sale of entire AI data center systems or AI factories doesn't really fully encapsulate what NVIDIA does anymore. Their ecosystem actually allows them to monetize all 5 layers of that cake that Jensen talked about back in January. So this slide here, we pulled this from last year's annual report. When the new annual report is out for fiscal 2026, we will, of course, update this and take a look at this. We're on Semi Insider and discuss it again. But you can see from the comments here, it is more than just NVIDIA sales of systems. They actually earn revenue as well from licensing and development arrangements with companies that participate in their ecosystem, in their supply chain. So as this infrastructure build out lengthens and expands, NVIDIA is getting a cut of the whole cake. So this explains why NVIDIA has gotten so large. It has its fingers in all 5 layers from bottom to top. And as the global industrial sector mobilizes to complete this build out to help its customers, Nvidia is monetizing it, and its equity investment strategy, which is, I understand, controversial, but especially its investments into those AI labs, those equity investments are designed to secure Nvidia a cut of the top of the cake as well as it gradually expands and encompasses more of global GDP years down the road from now. So given the new information that we have, we've updated our assumptions from a couple months ago to the following. GAAP earnings per share and free cash flow per share grew 67% and 61% respectively in the last year that just ended in January 2026. Stock price is up about 50% since January 2025. There's been quite a bit of volatility there, and we would actually expect that stock price growing less than the earnings per share and free cash flow per share growth to be a normal expectation given the premium valuation Nvidia stock does carry. But at any rate, if Nvidia per share profitability does increase again by another 50% plus, and it would seem the early indication is that will happen, revenue in Q1 expected to be up 77% year over year, and GAAP earnings per share expected to be up more than double compared to a year ago. So we think 50% plus per share profit growth is definitely doable. We think perhaps a slower growth rate for the stock itself, say 20 to 40%, would be healthy to allow for some future slowdown in the growth build out or even a cyclical downturn at some point in the future. It's difficult to wrap our heads around these numbers when they're so large. And to be fair, besides just trying to comprehend these numbers that are so huge for Nvidia at this point, there are other risks that we should be wary of. One of them being data center build out is actually causing more bullwhip effects through the economy. This is something we started to all get familiar with, especially in 2017, 2018, with the start of the trade war between the US and China. And Nvidia is the latest to say that the consumer market, primarily for them that would be in PC gaming, is going to be under pressure this year because of memory shortages, as a lot of memory makes its way into the data center instead of into consumer products. So there's shortages. This is having a ripple effect, bullwhip effect through the economy. There's risk here. This is still ultimately, at the end of the day, chips, semiconductors, and the infrastructure layer are going to be faster sales cycle markets. And so that's something to be aware of and on the lookout for. But on the flip side, there are more indications that there is room to run here. We did this video and this article just a few weeks ago. Auto, industrial, and power markets in the semiconductor end market segment have actually finally joined in on the party. You can read that and watch that here. We have that linked. Give it a watch, take a look, hit us up with questions. Hope everyone has a good weekend. Take care.